Good morning, everyone. Thank you for joining us today. My name is Alejandra Rodriguez, and I work for the Center for Financial Empowerment, which is housed in the county's Department of Consumer and Business Affairs. The CFE convenes, advocates, and builds capacity to strengthen the financial health of county residents with a focus on Black, Indigenous, and people of color to build economic resiliency. We hold webinars called Empowering Conversations as a way to help service providers and practitioners stay current on trending financial empowerment issues and for you to share the information with the clients that you serve. Today, we feel very fortunate to have TJ Mercer and Christina Roman from Experian. TJ is the Senior Director of Consumer Inclusion for Experian North America. In his role, TJ serves historically underserved communities, youth, and young adults. In partnership with the consumer education team, they set forth to educate, equip, and inform consumers and small business owners on all things consumer and business credit fundamentals. Christina is the Consumer Education and Advocacy Manager for Experian. Christina manages Experian's Education Ambassador Program, which is an employee advocacy program that provides credit education to Experian employees with the goal of empowering them to teach credit fundamentals in their local communities. Additionally, Christina manages Experian's free educational materials, and she utilizes her social media background to provide guidance on the consumer education and advocacy team's various educational social media initiatives. Thank you, TJ and Christina, for joining us today. They will touch on credit reports, debt, managing debt, misinformation, and much more. So please take this opportunity to ask these experts all of your credit-related questions. Before we begin, just some housekeeping items. This session will be recorded and shared via email to attendees, as well as posted on the DCBA YouTube channel. Also, please feel free to post questions in the chat. Our speakers will do their very best to address all your questions. And please don't forget to take the survey at the end of the presentation. TJ, Christina, take it away.
Hey, good morning, everyone. Excited to be here with you today. Again, I guess we don't have to do the introductions. I appreciate that. Alex, walking through that. Christina, as always, I appreciate you jumping in with me on this presentation. So, again, we're super excited to be here today. We have a presentation. We have, I believe, an allotted amount of time of an hour and a half, which is unheard of for these type of presentations, but we're excited to have that. So that way we don't have to rush through anything. We want you all to be interactive with this. We'll be monitoring the chat. Whoever's not presenting, we'll try to get to the questions. I do have a list of questions as well that was sent over by the team as you were registering. So we're going to try to get through some of that information and stuff as well. And then once we finish the presentation, we'll invite people to, I don't know if you're able to come off mute or on camera to ask questions. If you are, we'll definitely take those. If not, we'll just continue to answer the questions in the chat and kind of have that conversation. So again, let me pull up our presentation. All right, can I get a thumbs up, Christina? We're good? All right, awesome. So let me just start with just a snapshot of Experian. Obviously, everyone knows the three credit bureaus. We talk about that. We are a lot more than that. We are a leading global information service organization, not just a credit bureau. We're supported and work in 44 different countries. Our number of employees has actually grown. It's close to 22,000 employees since I need to update this slide. We're at 44% women globally, is spanning all those different roles. And then last year alone, we did 21,000 volunteer hours. We're just under 6 billion in revenue. But when we talk about Experian just by region, 65% of that in North America, headquartered in Costa Mesa, not too far from you all. I was just in LA and in Costa Mesa last week. But we also are in Latin America, Brazil, UK, Ireland as well. We do have our employee resource groups. We have 8 total employee resource groups. They are all working and thriving, trying to create an awesome employee experience. We also are selling and serving over 100,000 of clients, and that could be from mortgage to fintech to trades to public sectors to healthcare, delivering accurate and timely information and data, and then working across the markets. We're consistently known as one of the best places to work. I actually want to say we're probably one of the best hidden places to work. I'm going to be completely honest. I've been at Experian for a year. It was not on my list of destination landing spots, but this has been an extraordinary year. I've met some extraordinary people, and we're doing some extraordinary work. So I'm privileged and proud to be here sharing this with you all today. I sit on our global diversity and inclusion team. I know we talked a little bit about that in the introduction, but diversity is one of our core philosophies here at Experian. We don't just talk it, we are walking into that purpose. We are looking to serve a better tomorrow, a better today by making those positive and intentional changes. We're not doing activity for the sake of activity. This is not DEI theater. We are producing products for the clients and the consumers by listening to the clients and consumers. We're looking at our programs, how we're putting it together, and then we're supporting the culture. We're celebrating the culture. We're understanding where things start and where things stop. We're trying to include a wide range of our DEI and our purpose, and it all really kind of is driven by this will that you see here. So drive high impact through a global framework with local relevance. And so we talk about people, community, clients, and consumers. And so when we do presentations like this, we're hitting all three. So you, the community, which is made up of the people who are also consumers. And so we try to put all of that together as we're moving forward. If you want to learn more, Experian.com/diversity, tons of different ways of how we're supporting from historically underserved communities, rural areas, the youth, young adults, college programming. Me, myself, and Christina just did a college activation last Monday. And so, again, we're continuing this narrative, we're continuing this work, and continuing in this race. So, disclaimer before we get into everything credit and everything kind of moving forward. The purpose of this presentation is to help you better understand credit reporting and to provide you general information on how you can manage your credit report so that you can get the credit that you need and that you want. For legal reasons, myself nor Christina can discuss issues specific to your personal credit report, cannot advise individuals on how to improve their credit report or credit scores. We cannot submit disputes regarding your personal credit on your behalf, and the information regarding Experian's policies and the processes is current as of the date of this presentation. That could change. It changes upon a multitude of different things from local to state to federal laws, bills, and other things that kind of pass. And so when you're asking your questions, we can talk in large scale and you know, and I don't want to say like hidden type of code or this or that, but like Christina wouldn't be able to ask me why Ford reported her 60 days late when she wasn't 60 days late, and how can we do to fix it. Number one, I don't even have the system or the computer access to look up anything and do that. I just have this PowerPoint. So we're gonna keep it moving and kind of go from there, but I think you all kind of get the gist of that. All right, so starting at the top and working down. So there's 3 national credit reporting companies. Credit reporting companies serve consumers and businesses by making possible for instant credit, nationwide credit, widespread availability, and account management. The 3 reporting companies are Experian at the top for a reason, Equifax, and then TransUnion. And so if you have a active credit card right now, most likely if you are just even just a checking account, most likely one of these 3 companies is going to be partnered with that bank and offering you some type of, you know, free credit sampling, whether it be a yearly report or a monthly report or something that you can enroll in. And so always just be on the lookout of that. But Experian, Equifax, TransUnion. Expedia is not a credit union. It just happens to sound very close to Experian and Equifax, but it is not a credit bureau.
I can't tell you how many times I was asked when I first started this, oh, you work for the travel company. That's so cool. Can you get discounts? And I'm like, no, I don't work for the travel company. I work for the bureau.
Exactly. All right, so the credit cycle. Credit cycle is very simple. You pay the lender. The lender updates your records. Lenders share that history to credit reporting companies. The credit reporting companies share with new lenders. And so again, I have a credit card with Chase and Southwest. I swipe that card. I then pay the merchant. Then I go back and I pay my lender for giving me the credit to buy what I bought from the merchant. The lender then updates that to say TJ consistently paid this on time. He share that with credit reporting companies. And then when I go and I look for a new home or if I look for a new car, they're going to see my credit history, which then tells them or gives them a story about what my credit worthiness is. I don't know why the word dropped out of my head, but my credit worthiness. So credit companies are like libraries. Credit reporting companies' clients check out information only in if they have permissible purpose under the law. So there's nobody out there that's consistently, checking your algorithms for this and being like, oh, hey, here's some credit for this, or, or just pulling your reports or doing any of that type of information. It's not what we do. We are only looking at the information when we have a reason and permission to do so, whether it be from you or by some other type of entity that has justification and jurisdiction for us to be able to pull that information.
Yeah, and I quickly just want to share that some of those permissible purposes would include if you apply and
Oh no, I think Christina froze, but it's okay. I think what she was going to say is that if you apply for an apartment, that person that's renting the apartment may have permission to go and pull your report. If you're applying for obviously any other type of like loans or different things as far as that, maybe even sometimes I know a lot of companies have stopped this, but if you're going for a financial type of position, there is an opportunity where that company may pull your report. So Christina may have a point when she gets back on. So you did freeze. You did freeze, Christina, just so you know. All right, so what's in your credit report? Identifying information, account information, bankruptcy and public records, inquiries, and dispute instructions. Now, dispute instructions are very important because if you see something on there where the information that you feel is incorrect, the information for how to dispute that lives on that credit report. So it gives you the information in which you can then be able to go back and dispute it and hopefully have a successful dispute to get that removed or get that fixed on your credit information. What's not on your credit report? This is also important. Criminal backgrounds, medical information, buying habits, transactions data, income, bank account information, and credit scores. That's not on your credit report. So if you go to apply for a new mortgage, we're not going to see how many times you went to Chipotle, right? That's not factored into your actual credit reporting. The medical information is not. And neither is the criminal background as well too. I always emphasize those two type of things because I think they're really important. And there's a lot of misinformation out around there. So the information that is kept on your report, how long is it on there, right? And I saw some of the questions beforehand. People were talking about that, but this is a great scale here. So the type of account and then the time frame. So we have open accounts in good standing indefinitely, right? I've had an Express card since 2005. I haven't maybe bought a polo or a tie from them in quite some time. Nothing wrong with the store, but the account's still in good standing, and so it's open. I had a Walmart card when I was in college. That account was in good standing, but then it closed. And it literally just came off of my report a couple of years ago after it had closed. Late or missed payments, that's 7 years. So those 30 days, 60 days, 90 days, late things is going to live on your report for 7 years. Collection accounts, 7 years. Bankruptcy, 10 years for chapter 7, 7 years for chapter 13. And then credit, the hard credit inquiries, not you went to AT&T and you financed a new iPhone, meaning like you got a new car, you got something where it was a hard inquiry. That credit inquiry is going to last for 2 years on the report. So So common myths about credit reporting, and Christina, feel free to jump in on some of these as well too. When paid, the bad debt will go away. Not technically correct. Again, we just talked about those late payments and some of the stuff that's still going to be on your report. So if you happen to have 60, 90 days on a credit card, but then you finally end up paying off that credit card, your score will increase slightly because you have more available credit and you're no longer in a bad standing, but it's still going to be on your credit report that you did have that at that period of time. The credit
Yeah.
reporting.
TJ,
Sorry.
just to add on to that, also, I think when people have an account and they're working on paying their balance down, they get really excited because when they hit that final payment, they immediately run to their credit report and check to see, like, hey, did my credit score go up because I just made this payment, today or yesterday? And it's important to remember that the lenders typically report to the credit reporting bureaus about once every 30 days. So it's going to take time to see that reflected in your credit report. So be patient with it when you are actively trying to reduce your debt.
Absolutely. Another one, I'm not responsible for those charges on our account. Um, you are. If it's our account, meaning you and somebody else, it's a joint account. So you'll definitely be responsible for those. So if you open a credit card together, you open a line of credit together, absolutely responsible for that. A divorce decree separates joint accounts. It does not. You have to call into the specific lender to talk about what that separation would look like of the account, or removing yourself from the account, allowing someone else to keep that account, and then opening a new account. It gets, depending on the lender, it depends on how they want to do that. When requesting your own report, pre-approved offers harm your credit history. That's not true. That is something that honestly, it's the algorithm. It's just giving you information and stuff that it's kind of pulling and it's saying, hey, you're pre-approved for this, and you can look at it, you can investigate it. It's not going to hurt your score. Consumers must give their permission for a report to be issued. We talked a little bit about that. Christina, actually, if you wanted to, I gave an example of what I thought you were going to say, but do you want to give it another shot, see if you freeze up again?
Yeah, my internet, I don't even know what's happening, but I'm going to get that checked out. But yeah, I wanted to share that some of the common permissible purposes that consumers should know when they go to open an account. When you apply with that lender, the lender is going to go to the credit bureau, and they have the permissible purpose to then access your credit report to make that decision on whether they're going to extend you the credit card or the loan that you're applying for. Others refer to what TJ mentioned, those pre-approved, offers of credit. That's a permissible purpose, and it doesn't impact your oh man, did I freeze again?
No, you're here. You're good.
Oh, okay. Oh, I'm sorry. You looked down and then I froze. Okay, and it doesn't impact your credit score at all. Other common forms include underwriting insurance. That's a permissible purpose. A business transaction initiated by a consumer. Eligibility for a government license. So if you take a job in the government sector and then they need to run that background check on you to see if you qualify for that government license, then that's a permissible purpose as well. So those are just some common things to watch out for, or to know about permissible purpose. And when you need to give your permission for a credit report to be issued. Now, the only time that you absolutely do have to give your permission for a report to be issued is when you are applying for a job. Before they run that credit check, you do have to sign for that. So that is the one case in which you do have to give your permission for your credit report to be issued.
And so I'm going to try, and I apologize. I'm looking down, but I'm looking down with a purpose. I'm looking down to follow some of the questions that you all submitted as we were going through that. And so one of the questions, and the top question was, if a consumer has a dispute with information on their credit report, how quickly should they expect it to be resolved or corrected? And so Christina touched on that just a little bit when you're talking about the paid debt and when it will go away. So number one, if you dispute something, as Christina mentioned, the lender itself reports to the credit agency on a schedule. So it could be every 30 days, every 60 days, depending on who that lender reports to. And do keep in mind that not every lender reports to every credit agency. So that does happen to sometimes too. Like I've seen things on my TransUnion report that is not on my Experian report from a specific lender or something maybe I disputed. But it does take a little bit of time. And so once you have the dispute itself, I can't tell you how long that dispute will go because there's always going to be a fact finding and a double checking, kind of going through that information that could be back and forth between you, the bureau, as well as the lender. But once it's resolved, you should be able to see the changes on the report. I want to say it's within 60 to 90 days is ideally kind of a window when you would be looking at once the dispute is resolved, not once you initiate the dispute.
Yeah, you typically have to allow 30 to 45 days for that processing to occur, but often it does happen a lot shorter, like in a lot shorter time, typically like 10 to 14 business days, and sometimes within 2 to 3 days, depending on how quickly the lender responds. But by law, you have to allow 30 to 45 days.
All right. So when we talk about the information, we ask again, what is a credit score? Use instead of the manual score sheet. It's a valuable risk management tool. There's many different models. So one of the questions that also was to say, hey, is there more than one credit score? There's different scales and there's different sources for the scores. So there could be a FICO 2, which we use for housing. There's an auto score. There's a your regular score as you look at it. And so all those different things are available within your like Experian Go tool. You can look at those different scores. And I do have a promo code that I'll send out for you all today that you can use that premium access for 12 months. The free access, it still gives you a lot of this information as well too. But credit reporting companies often apply the model selected by the creditor when delivering the credit report. However, the credit scoring model or formula is wow. I can't even say it today. Proprietary. Wow. Yeah. Proprietary to the developer. And so when you go in, for example, and you have an auto loan of what you're looking for, they may pull your credit score. It'll be a hard inquiry. They'll pull that. The formula in which they then use for the selector model of how they're going to, deem that score is going to be based upon their scoring model and their formula. So different service providers, even within the industry, may have different formulas. So Nissan may be different than Mazda, may be different than Audi, which may be different than Mercedes. So you have to look at all of those different things and they should be able to explain that to you. So always ask for that detailed reporting if you need more information on why you were maybe either apply for something or deny something as you're looking at it.
Yeah, and it's also, I just want to recommend that people don't focus on the number so much as the information that's in your credit report, because that's the information that's driving your credit score. TJ talked about proprietary algorithms. Those are using the information directly in your credit report to inform that algorithm and to create that credit score. So rather than focusing on whether it's an auto score or a FICO score or did you get a Vantage score, focus on getting your credit report and knowing what's being reported about you. That way that you can understand what drove that number.
Absolutely. So risk factors, we talked about that, right? And so generated, and Christina kind of really just kind of set this up for us, but we talk about generated when the risk score is calculated. It tells the consumer what to address in their credit history to become more credit worthy. So again, it's not the number, it's the information and stuff that could be holding you back that's within the actual report. They're largely consistent from model to model, are usually included in or described in an adverse action notice. And Experian provides risk factors to consumers with the scores. It provides through its direct-to-consumer services. So that's going to be like your Experian Go. When you're looking at the account, it talks about these different risk factors and where they would go. So if a risk factor is you have um, your debt to availability, your debt to credit availability, your utilization. Maybe your utilization is at like 92%, right? Meaning you have $15,000 worth of credit between different cards and accounts, but you're using 14,300. Like that's a risk, right? And so how can you make yourself more credit worthy? It's like, well, what are companies going to be more comfortable with? If I have 15,000 and say I'm using 6,000, they be more comfortable with it. If I'm using 15 out of 15,000, it kind of screams that maybe there's something that's going on that has me living above my means, or for some reason why I can't, be making that payment or looking at something like that. And so these are what companies are looking at to generate that score, and then obviously take calculated risk on the consumers that they choose to offer credit and extend credit to.
And you generally want to keep your utilization. They say the highest you want to keep it is 30%. The best, I would say the highest we say that you want to keep it is 10%, but it's even better to pay it off every single month. Pay your credit cards off every single month if you can. And also another big important risk factor is going to be your payment history. So how you make your payments, do you make them on time? Do you pay late? A late payment, I didn't know this when I first started using credit, and it was something that could have saved me a lot of headache. A late payment will remain on your credit report if it's reported to the credit bureaus for 7 years. That's a long time. So it's really important to make your payments on time. And I also want to emphasize, when I say a late payment, I don't just mean you were a couple of days late and you had to pay a late fee and then they would report you. That's not the case. You have to miss an entire billing cycle for them to report you to the credit bureaus.
And when you get the notice, like it's bright red, right? It's like a boom, 30. And then 60, I think, is even darker color.
Yes.
But
Yeah.
it sits there for a while. All right, so what I wanted to do is I wanted to stop the presentation for a second, because the second half of this presentation we kind of get into business credit, and we're going to talk about the differences between like business credit and consumer credit. But there's a lot of questions that had came in beforehand that were around just the consumer facing credit. So I wanted to make sure that I get that to everyone and get to some of those questions. If you do have other questions, you want to throw those in the chat, please feel free to do that at this time as well too. But we're going to take a quick pause here and just kind of do like a little Q&A session from some of the stuff that you submitted, as well as what you may ask over the next 15 minutes or so. And then we'll get back into the presentation and talk a little bit more about small business or just business credit in general. Now, when I started, I said that I did have something that I wanted to share with the group. I just clicked a link. This link, it will take you to a site. Within this site, there is a promo code for the Mythbusters site that's going to give you 12 months of free premium access to Experian. So with a direct free Experian account, you do get your monthly score from Experian. You do get some simulators. You do get some other product recommendations and different things around that. With your premium, you're going to get access to certain identity works, bill fixers that can help out with some of that. You're also going to get access, I think it's every quarter, to all 3 of your scores. So you'll be able to see your Equifax as well as your TransUnion score. It also does going to open up and unlock a few of our more in-depth simulators, and not even just the simulators, but the score tracker or the score analysis as well too. So everyone that's on this call, feel free, use the link that I just provided. If you already have an Experian account, which thumbs up, there's still a promo code. You can go into your settings, you can add the promo code, and what it will do is it'll upgrade you if you're not a premium member, but then it'll wipe out what your monthly charge is if you have been getting a charge for that.
Yeah, and I can't stress enough the importance of credit monitoring, because if you're in the process of building credit, if you're in the process of managing your credit to achieve a milestone purchase, credit monitoring can help you do that. Even if you just want to know what your credit score is, this credit monitoring service can do that. We talked about risk score factors earlier. this app will tell you specifically for you, this is what's helping your credit score, this is what's hurting your credit score. TJ mentioned the simulator. What the simulator is it's a function where you can say, if I do this, how will it impact my credit? Impact my credit score. If I get an auto loan, how will that impact my credit score? But what's even better, and I think what's a really great tool that we don't talk about that often, is we have a credit planner in there, and that credit planner tells you specifically, here's what you can do to improve your credit score. And so you don't even, it takes kind of the guesswork out of it. And if you follow that plan, you should be able to see your credit score go up X number of points, and you can set that value of like, I want to get to 750. What do I do? And this planner will tell you the steps to help you to get there. So a lot of really cool resources there, and also a lot of really great education there. So if you want to, if you're inspired by this presentation to take a deeper dive into credit and to learn how to make credit work for you, those resources are available directly in our app.
And that's honestly what these sessions are really meant to do. And I'm just being very candid out there. Like, I'm excited that we do have a full hour and a half to spend time and talk to you all. But like, this is like the sprinkles, not even the icing, right? Like, this is like the sprinkles, what we're doing. You got to get to the icing and the cake and the filling and like maybe even a scoop of ice cream. Like, there is a lot to learn about credit to make sure that you're putting yourself in the best position. So I want to go to another question that came in. It says, can my credit continue to grow although I do not use any credit cards and only have one active auto loan for which I pay on time every month? So number one, congratulations on paying that on time every month and not having a bunch of credit card debt. If you have credit cards that are open, leave them open, right? That does not hurt your credit score. It only just shows your available credit. And then in obviously any type of emergencies and stuff, you would have that. The auto loan is great, and the on-time payments are also great that you're making as well too. There are other ways in which you can boost your score, that you can use that. And so I just dropped another link in there. You're going to see the link if you were to open the other account or if you create an Experian an account. But we do have a product called Experian Boost. Now, Boost is free. Now, another question asks, what is Boost and how does Boost work? And then I'll let Christina talk a little bit about it as well too. But Boost, essentially, what you will do is you connect your primary checking account to the Boost app, and it will pull your subscription services, your utility services. It can even do rent now, but it shows those on-time payments. So if you have Netflix or Disney Plus, that $14.99, that $15 that you're paying every month, that's going to go and show your on-time payment history to try to help boost your score. On average, every time somebody does Boost, or when they first initiate Boost, I want to say it's anywhere between like 12 to 17 points on your score to go up. But over time, it will help boost your score by stuff that you're already naturally doing. Now, the other thing that I would say, and this is in no way like Experian hat off. But if you have a credit card and you have a decent limit on that credit card, and there's things that you know is a fixed income that you're going to be buying every year or every month, look at some of those different services and see if you could be buying and paying off every month. For example, I have two small ones. They're in daycare. They this year at the beginning of January allow you to then start paying with your credit card. And so I was paying cash for the last year and a half. So now I have my credit card on that account. It pulls every week, and then I go and I pay off that credit card every week. So not only am I getting that history of paying that and showing the utilization and the work of that, I'm getting about 400 Southwest points every week that I use it dollar for dollar. And so there's definitely other ways where you can use some of these reward cards and other benefits. When I go grocery shopping, I set my grocery list, what I'm going to do. I swipe my Southwest card, that $200 gets paid off. Sometimes I even do it right in the app, like as they're still bagging the groceries. I'll go boom, boom, and just pay it. But again, it's that utilization and being able to kind of show you're responsible and kind of credit worthiness around that and being able to build it. But Christina, anything you want to add? Jump in.
Yeah, you know, what made Boost so revolutionary when it launched in 2019 was that prior to that, any information reported to the credit bureaus was reported externally by your lenders about your payment history. And we were frequently hearing from consumers like, I don't want to take on credit to build my credit history. Why can't I get credit for the bills that I'm already paying? And we heard you and we listened to that and we said, okay, what are some of those common bills that people pay every single give them credit for? Now, you do have to pay them with a checking account or savings account or a credit card in order for us to be able to pool those transactions. If you go every month and pay in cash and you just want to submit your receipts, that's not, we can't track that. That wouldn't work for Boost. But if you pay it with a checking account, a savings account, or a credit card, we can then pool those transactions. And, you know, this past week, I know Netflix made that announcement that you can't share passwords household to household, much to a lot of people's chagrin. But maybe if you do have to create your own account, maybe this is a good account that you could then use to add to help to boost your credit. So maybe there is a plus side there. It stinks that you can't share accounts anymore, but you know, that could be an upside if you have a streaming service. And we actually launched that portion of the service during the pandemic because we realized that so many people had taken to streaming services for entertainment. So why not give them credit for that?
And so, as we're moving forward, and this is really maybe just for me, in the chat, I really only see myself and you, and Daniel. Sorry, yeah, it's just myself and you. I just want to make sure that we have access to see if anyone has been putting stuff in the chat, and maybe it's not just going to be us as the panelists discussion. Can somebody check that for me? Oh, there are no questions yet? Okay. All right. We're just killing it. That's cool. All right. But feel free to throw in some questions. We want you all to interact. I'm just kind of going down the list and looking at stuff. One of the other questions, we just talked about how does Experian Boost work? And we talked about rent utilities being included and establishing that. There's another question that says, are there banks that don't require a social security number or TIN? And then there was another question. Was that?
Oh no, I didn't. Yeah. I did look into that, and it really depends on the bank. And like we can't really say yes or no because it really depends on the banks and how they set up accounts as to what information they will require from you to establish an account, unfortunately.
Got it. Because I know there's another question that talks about undocumented and being able to do that. And I'll be very honest, it's a huge issue. It's a huge issue as far as just the credit invisible that we look at. Oh, there's questions in the Q&A.
Mm.
Can I get to the Q&A?
Yeah, where's the Q&A?
Oh, there it is. Oh, okay, yeah, there's a whole bunch of questions in there. All right, cool.
The question,
I knew there
Where's
was
the
something else.
Q&A?
the Q&A is at
Oh.
the bottom right-hand side. You
Yep.
check to click the
Perfect.
3 dots. Yeah.
All right. Cool. So I'll go back to the top of that. I just saw that. Were we in the middle of answering something else? I think we answered that, right?
Yeah.
Okay. I'm gonna go to the top and look at some of this. Okay. So is there a lifespan difference for closed accounts not in good standing? I don't believe that there's a difference. Meaning like meaning that if they close your account because you weren't in good standing and the lender closed your account. So say like you had a Visa card through Macy's and they, decided to no longer offer the card to you and they shut that down. I'm pretty sure that's still going to last on your report for 7 years.
Yeah, the missed payment information will last on your credit report for 7 years.
Okay. can somebody request a credit report of myself? And likewise, if I meet someone new, I want to make sure that they're reliable for any transactions I want to make with her or him. Can I request a credit report on them? No, but you can
No.
absolutely take them to like Experian or another, place and be like, hey, like, pull your report. I want to see the report. Like if you're at that stage in the relationship, you want to see, how much money they, are if they're in debt or if they have, good credit or something as far as that goes. There's a multitude of ways for them to get their hands on a report that they should be able to share with you. But I would say, this is just me. If you can't ask them for that and they won't provide that for you, and it's something that's important to you, I would probably say there's other trust issues within the relationship. But there's a way to do it. So, throwing that out there. Good question, though.
Yeah, that goes back to permissible purpose, what we were talking about. You can't just pull a random person's credit report, their personal credit report. For business, that's a completely different transaction, and therefore you will have access to pull a business credit report if you are entering in some type of transaction or business deal with someone.
All right. They asked, can we share a little bit more on the adverse action letter?
Yep. So an adverse action letter is when you apply for credit. If you were denied credit based on the information within your credit report, an adverse action notice is created to let the consumer know what credit report was used, what bureau provided it, what score was used, and why that information within that report may have resulted in you not getting the loan or the credit that you applied for. Now, lenders are required by law to send you an adverse action notice if they decline you for a credit that you are applying for. So you should receive that in the mail shortly thereafter. And then that will come often also with a phone number to call the bureau that provided it to either discuss a dispute of information that's on your credit report that is wrong. Now, just remember, when you're doing a dispute, you can't just call to remove negative information so that you can qualify for a loan. You have to be calling because there is actually an error within your credit report that you can fix, that you have documentation for, that you paid. Say a lender reported you late, but you know for a fact that you paid, and you have this credit card statement or your bank statement that shows that you paid. You would file that dispute and submit that documentation, and that you could do with a phone number in that adverse action notice.
Yep. Another question, but Cheryl just corrected me. You're absolutely right. The expiration date slide says it's 10 years for accounts in good standing. It's 10 years if the account is not in good standing as well too. They're the same within that. So good call out for that. Yes. So some more questions. We talked about the action letter. We got to thank you for the promo code. It will help you. I'm looking forward to that. How many months will it take for you to see improvements on the credit by using and paying those bills on time? I'll be honest, like Christina, you can maybe throw in some into that, but it's a little hard to tell because it is something that is over time in period, and depending on how large the bill is and available credit and the certain things, like as much as Boost will help, a lot of these subscription services are still, they're a lot less than a car loan would be, right? So like we're talking like $15-20 a month compared to anywhere between like $400 to $600 for like an auto loan. Now paying your car on time is going to have a greater impact than paying some of those other bills. But that was why last year in August when we rolled out Boost for Rent, that was such a big deal because rent should be somewhere near the half or 3/4 mark of what a mortgage would be if you own that actual property. And so we're showing that that capability and that availability to be able to do that. So hopefully that answered that question.
And if you were talking about like if you were previously delinquent and you're catching up, or you're trying to move forward and pay your bills on time, maybe you did get caught up. Those previously late payments will remain on your credit report for 7 years, but building those positive habits and continuing to have those positive habits moving forward making every effort to pay your bills on time, even if it's just the minimum payment, so that way you can meet the minimum requirements to not be reported to the credit bureaus. Those actions will help you in time. And the further away that last late payment is in your credit report, the less impact it's going to have on your credit score. So again, it's all about time. If just this past month you had a late payment reported to the credit bureaus, and you say, okay, from here on out, I'm going to make my payments on time. It will take time for that score to improve, but you're getting the benefit of building that positive habit that's going to move you forward, and it's going to positively impact the future of your credit. So it's worth doing now.
So one of the questions said, are all the records from the countries where Experian work in the same profile? Example, if I have an account in country A and I live in country B, are they all together in one profile? I want to say the short answer is no, but Christina, is there any more?
Yeah, we don't link country accounts, like accounts from different countries, only because the credit systems in different countries are completely different. So the information that affects your account in one country a certain way, it doesn't impact your account that same way here. So actually, it's really hard. We've had executives, our CEO, he moved over from England, and he had to start from scratch. We have had other senior executives that have had that same problem. One came from Germany to the United States, and he wanted to buy a house, and there was a lot of paperwork that he had to go through because he didn't have an established credit report here, and he had to work to build that. So that's pretty much why your information won't transfer from country to country, because of how the credit systems work in the different countries. That's why you wouldn't see like one full report with all of the country information.
All right, so here's a really good one from Melinda. Is it beneficial to increase your credit limit when your credit card offers it, even if you don't really need it? I'll let you take that one, Christine.
I think, well, what that'll do is it'll improve your utilization rate, right? So even though you don't need it, if they give you more, that lowers, if you're carrying a balance on it, that lowers that debt to limit ratio, which could look good. However, know yourself. That's what I will say, know yourself. If having a bigger limit is a bigger temptation for you to spend more and maybe drive up that credit card bill, then is it the best financial decision for you? It may benefit your credit score in the short term, but if you start to use that credit card more and you say, well, I'll pay that off, and you drive that balance up, that could negatively impact you, or that will negatively impact you because you're driving your utilization up. So I think this is a personal preference question, but know yourself. If you feel as though you can have that extended credit and you'll be able to manage it well, go for it. There's nothing wrong with it, especially if it's already being offered. Now, if you requested that increase in your limit and they have to do a credit check because you requested it, that's a different story. That could result in a hard pull, which could impact your credit score negatively.
And that's where I was going to go with it as well, too, right? So if it's something that they offer it to you, and one of the things we talk about from consumer education, our consumer inclusion, our financial literacy standpoint is the mental health around it, right? There's one thing to have the access to the information and all the stuff of what we're talking to. It's another thing to have the mental fortitude to be able to enact and understand where you're going within your credit journey. And so, for instance, if they offer something to you and you didn't have to do a hard pull, again, to Christina's point, preference, right? But if you're looking at, maybe you're buying your first home and you're thinking about, maybe not your first home, maybe you're just buying a home. I don't want to say first home. Maybe you're just buying a home and you're thinking about, furnishing. Are you thinking about like the moving expenses? Are you thinking about, all different type of other things that, get associated with the home ownership? So you're like, oh, maybe it'd be nice to have a few extra $1,000s, on my credit limit. I haven't done it in a while or something, like as far as that goes. That can hurt you when you get to, the closing process and the mortgage, lock-ins and different stuff, because you're doing hard pulls. So you always have to pay attention to the timing and the viewpoint of what you're trying to do up front. Like I'm always, putting myself in it. We moved into a new home in 2021. I applied for a few things after we got into the house, like within the first like 9 months or so. There's some stuff that I wanted to get and some stuff that I financed, there's some sales and some stuff that was going on. But I wouldn't do that 9 months leading up to the purchase of the house. I did it 9 months after the purchase of the house because I'm like, okay, hey, I'm not moving anytime soon. But then to Christina's point, I still didn't overextend myself to the point where I put myself at risk of getting like a 30-day on the house or 30, something as far as that goes, right? But it's always a timing thing. So you're always trying to look at it like your credit is a living, breathing thing. There's a multitude of things that are going to affect it. I would say the delta and all those things that affect it is probably going to be you. Like
Yeah.
more than likely, it usually comes down to some type of action or something that you did. And I don't want to set it up to make it sound as if like you get a late payment or something like that. It's like the end of the world and this or that. It is a factor. It happens, at times. Like again, putting myself in it, I had something that we financed that was on, an auto pay. But I think when I set up the auto pay, it was on a debit card. It wasn't on the ACH where it was pulling from like the actual account. So the card expired. I wasn't paying attention. They emailed me, but I wasn't really looking at the email because it's been on auto pay for like 18 months. And then like I got a 30-day. This was like 7 months ago. And like my wife freaked out. I was kind of like, that sucks. But then I just fixed it and we just kind of moved on. Right. I did submit like a dispute just based upon my history, this or that, and I'm waiting to see if they're gonna take it off. But not the end of the world, right? Like, but we want you to avoid it when you can. All right, so I'm gonna take a couple more questions here, and then we're gonna jump into the business piece of it, and we'll go from there. Um, yeah, I don't have access to the chat, but can I ask why don't the utility reports report to the credit agencies? That's a really good question. Um, I'm just gonna say it's probably just like the time commitment and the all the other hoops and stuff that the government um, and these utility agencies already have to jump into. I think that they should. I mentioned me paying for daycare using my credit card. I think it's wild that $300+ a week that KinderCare is taken out of my account doesn't go towards my credit worthiness. I think about single parents that may be out there or just parents in general that want to, get a new car or buy a home or something as far as that. Like that should absolutely go towards your credit worthiness. In today's market, it does not. And there is really no good reason for why, but I will tell you that individuals like myself and Christina are constantly in meetings with different people and we're telling them that it should. And so we're looking at that. And then the last question, and this is one that's probably going to be for you, Christina. If you're making payments on a charge off account, how can you get the lender to change the charge off remark to paid in full remark to improve your score? And I haven't had this one before, so I don't know if you have.
So for a charge off account, they should automatically be reporting that to the credit bureau. So if they're not, I think it's important that you talk to them, especially if you're paying it in full, then they need to report that and that'll show as paid in full with the bureau. So they should be doing that themselves, but you have to call them and make sure that they're doing it. I'm not sure why they wouldn't be.
All right. And then when asked a question, said, are they adding consistent rent to the credit worthiness? Yes, they are. And there's other ways, and I'm just being very transparent. There are also other ways to do rent reporting outside of Boost for Rent, right? So if you're at a property or say you're someplace and they don't participate in Boost for Rent, there are other resources. You can Google it in which you can get your landlord or you can get certain people to report that rent to help you along that journey. It's a new product for us. We're getting more and more people on it as we go, just like we've been expanding the subscription services and different stuff that we're doing with Boost. But just because your specific rental spot isn't on there doesn't mean that you still can't report that rent as you're going off. And this is also something that's really big for young adults too. Like if you happen to be on and you're a student and you're living off campus, or maybe you have kids that are on campus but living off campus. You know, even if you're helping them with the rent, put their name as the primary on there. Help them, you know, build over time from a rent reporting standpoint. So I was going to move on, but this is actually a good question. Do student loans have an impact on my credit?
They act just as any other loan would. So you'll see that balance there. You'll see that balance there. Now, while you're going to school, you'll just see that account in your credit history. However, when it comes time to pay it off, that's when your actions are going to impact whether that student loan is going to impact your credit. So making your payments on time consistently will help to improve your credit score, you know. So it does act just like any other regular loan, like an auto loan or a home loan. That's how it would impact your credit.
Now, I can't tell you when Joe and them want that money back. I'm still not sure if I'm paying this month or not.
Yeah. So I thought I saw yesterday August was about when payments were going to start to resume, but you know, every time they say that it's going to resume, it gets pushed back a little bit further. So we'll have to just wait and see. Now, there's a question here. We're not required at the time to pay, but does that take an effect? No, you will not be penalized right now if you are not paying your student loans because it's a federally mandated pause. So you won't be penalized for that. However, when the time comes that they lift that pause, it's very important for you to contact your lender and see what your payment terms are. I actually got a notice recently that my loan was transferred. So now all the contact information I had for my student loans, I have to contact a brand new company. So make sure to keep note of that too. So if your loan was transferred because of everything going on, contact that new lender and figure out what are your payment options if you don't think that you'll be able to make that payment in the coming months.
Great points. All right, so what we're going to do is we're going to jump back into the presentation. We're going to transition a little bit. We're going to talk about business credit. And to that, I am going to turn it over to Christina.
Yeah, so let's talk about business credit reports. Business credit reports are an essential tool for banks and lenders and suppliers to assess your credit worthiness or the credit worthiness of a small business, your small business. Now, the information contained in that report provides the details that they're going to need to make credit decisions. So you want to think of your credit report just like your personal credit report. It will reflect your financial references, which will help creditors make those decisions. And those references, similarly to how we talked about your personal credit report, they're going to be provided by the lenders or with whom you do business with. So the suppliers, the wholesalers, the manufacturers, the banks, the leasing companies, they're all reporting that loan to the Business Credit Bureau and your payment history to the Business Credit Bureau. So that's important to note. And another thing to know about the business credit bureaus is TJ mentioned in the personal credit slide that Experian, TransUnion, and Equifax were the three main credit bureaus. Now for business credit reports, you also have three main credit bureaus. However, they're different. The three main credit bureaus for business reports are Experian, Dun & Bradstreet, and Equifax. So it's important to note those two differences. Don't go to TransUnion and ask for your business credit report because they are not one of the main business credit bureaus. Okay, so what information is located in your business credit report? Your business credit report is going to list your company name, your key personnel, your SIC code, which stands for your standard industrial class, your business type. This will include that is whether it's an incorporated or whether it's an LLC. It'll include your address, your phone number, your date of incorporation, the number of employees, your number of years in business, and your sales. Now, I mentioned this earlier, but unlike personal credit reports, which are regulated and can be only viewed with permissible purpose, commercial reports are not the same. Commercial credit reports are available to the public. This means that anyone, including a potential lender or supplier, can view your business credit report. But the other cool thing, which I don't think people talk about a lot, is this actually also gives you an opportunity to view how your competitors are managing their business. So maybe that's something to consider, pulling a competitor's credit report and seeing how they're faring in the market. We can go to the next slide. Okay. So what type of payment information is stored in your business credit report? This will include your current days beyond your terms, your payment trend indicator, your lowest 6-month balance, your highest 6-month balance, your current total account balance, the highest credit amount extended, the median credit amount extended, your individual account information, inquiries, and public records. So a lot of it, like if you think about it, like your personal credit report, how you have your loan available credit limit, and then it'll tell you like what was the highest limit that you charged up to that month, and then what your payment history was. It's a lot of that same factors. So when you're kind of looking at it from that lens, I think it's a little bit easier to understand. Now, when it comes to business credit scores, like your personal credit reports, your business credit report is often scored to help evaluate the risk and to streamline the application process. Now, business credit scores are vitally important to your business, and good credit is great for obtaining funding, launching or expanding your business, but that's just the beginning. So some of the benefits of having a good credit score include that it can save you money. Lenders offer better interest rates to businesses with good credit. You can obtain business credit without a need for your personal guarantee, and this reduces your personal liability. So you don't have to tack your personal credit to your business credit. It can help you stay ahead of your competition because the savings that you'll get from the best interest rates, you can then pass on to your clients and your consumers. And you can make decisions with confidence, ensuring that you'll get the money you need when you need it. Now, your business credit score can be purchased with your business credit report. Again, it's separate from your business credit report. And Experian reports are scored by Business Reports IntelliCore Plus, and they're scored on a 0 to 100 scale, with a higher credit score of 100 equaling lower risk. And risk factors are included with that credit score, similarly to your personal credit report, to tell you what's benefiting your credit score and what's hurting your credit score. Now, how do you establish a business credit report? You want to establish that credit report to ensure that your lenders can validate your business information. So first you need to incorporate or form an LLC, a limited liability company. You need to obtain a federal employer identification number. You have to open business bank accounts in your legal business name. You have to set up a dedicated business phone line and make sure that it's listed as soon as you establish that business. And you want to establish credit with companies who report the payment information. It's essential. If you're trying to build your business credit, if you're new to building business credit, ask your suppliers, your wholesalers, do you report to the business credit bureaus? Because I'm really working to build my business credit so I can get the best possible terms. Okay, now how do you obtain your small business credit report? You're going to order a copy of your business credit report at one of these two websites. So smartbusinessreports.com and experian.com/business credit report. I don't know if you can put those in the chat, TJ, but they may be a good resource for people. Also, similarly to that adverse action notice that I mentioned earlier that we went into depth on, if you've been declined credit within the last 60 days based on the information provided in your Experian business report, you may get a free copy by contacting Experian. By contacting Experian Commercial Relations at the phone number here. And you can also purchase a scored report. Now, how can you monitor your business credit report? You can check your credit report as often as you want. Similarly to your personal credit report, you're not going to be penalized if you check your business credit report. So we want you to check your business credit report frequently to ensure that the information is accurate and up to date. Now you can order a one-time report from Experian or sign up for business credit monitoring service called Business Credit Advantage. And this will give you access to check your credit report however often you would like. It also gives you alerts to anything new that may pop up regarding your payment history or anything. It helps you to keep track of your business. You get unlimited access to your credit report and score. You get email notifications of changes, and you get an early warning of negative changes to your business, such as identity theft. That's why that's also very important. Now, are your business credit report and your personal credit report linked? No, but they can be related if you secure business debt with personal credit. Now, when you first start a business, you're going to need personal guarantees of credit to get your company off the ground, right? You can't just go right into establishing or to getting business credit, because you need to build that history in order to qualify for the best interest rates. But as your business grows, it's important to separate your business from your personal credit. And there are many dangers in relying solely on your personal credit to fund your business. Because if your business becomes at risk, your personal credit score is going to be at risk as well. And what's more, many creditors are moving away from relying on personal credit alone when judging the finances of a small business. And they're using blended commercial scoring tools that integrate both personal and business credit to predict a small business risk. So it's important to separate your business and credit to help your business. Now, a couple of the benefits of separating your business and your personal credit is that you can obtain working capital for your business. You can borrow money. I mentioned this earlier. You can borrow money at lower interest rates. You'll simplify the tax preparation. You can see everything in that report. Your personal credit is protected if your business ever encounters financial difficulty. And you want to, again, make sure that you're working with companies that are reporting to the business credit bureaus. Go ahead, TJ.
So this is really important, just to jump in here. We talk about, COVID and the impact that it had on, small businesses. And if I'm just being honest, like there's a lot of small businesses that were frankly just a little exposed, like during COVID, right? Because they didn't have built up credit stuff, or, they were trying to back things personally or kind of guaranteed. With the consumers getting smarter, as Christina just mentioned as well too, the lenders are also looking at their processes and getting smarter as well too, right? So it isn't one of these situations where like it's one-sided. It's very much a upstream elevated type of nuance when we're talking about small business credit and how they're going to be linked and how we can separate them, because people are still dealing with taxes and PPPs and repurposes and all type of other reports and different things, because frankly it wasn't being monitored and it wasn't being done correctly for like decades. And now we're fixing it and we're changing a lot of different type of stuff. So always be on the lookout for new and interesting things. If you are a business owner or you're thinking about owning a business, look at some of the new stuff that's coming out. There's tons of new products, there's tons of new education, there's tons of new information of what these lenders are looking for and how to put yourself in the best position to take advantage of stuff like that. So just wanted to make that point as we move on.
Yeah, and to TJ's point and the point that I made earlier, lenders are looking at a blended look at your personal credit and your business credit. And so it's important to remember that you have to have permissible purpose to access an individual's credit report. And the Fair Credit Reporting Act allows lenders to review for business lending purposes personal credit histories of a proprietor of an unincorporated business, a partner in a partnership, and a guarantor of a business loan. So those are some instances in where a potential partner could look at your credit score because they do, or your credit report, because they do have that permissible purpose to do so. Now, the personal credit information that they obtain must be used only for a business credit transaction. Now, it's also important to note that securing business debt with personal credit makes you personally responsible and gives lenders the right to report the account and any missed payments to both your personal and your business credit report. And your personal credit report and your business credit report may be scored by one of the many hundreds of scoring models available to lenders to evaluate the risk. So that's why it's important to focus on not on the number, but what is on the information in your credit report that's informing that number, right? So we want to think about having those same positive behaviors of making your payments on time, managing your balances. Now, when you're starting a business, you may have to purchase more than you would like, but as soon as you have some kind of income, make sure that you're paying that down so that you're keeping that business credit report, in good standing. Now, how can your business and your personal credit reports be used together in that blended system? More than 90% of U.S. businesses are small. That means they have fewer than 25 employees and less than 20 million in annual revenues. And small businesses may have little to no credit history upon which to make that decision regarding business lending. Half of all owners use some form of personal credit to finance their small business. So it's perfectly normal if when you're starting a business, you do have to put your personal credit on the line. Now, half of all personal credit history acts as a reference for entrepreneurs. Once established, then it's important to transition that over to a business credit profile. Now, when you have that business credit profile, it can influence a supplier's willingness to extend you credit, the loan amount and terms, and business insurance premiums as well, which is really important. Now, what happens if you feel that the information on your business report is wrong? Similarly to the personal credit report, there is a dispute process that you can go through. So you want to first obtain a copy of your business credit report at one of those two links that we shared earlier, Experian.com/business credit report. Incorrect demographic information can be updated at businesscreditfacts.com. Now, all other disputes must be submitted in writing, and the instructions are going to be provided within your report. So all credit reports do come with those dispute instructions. Now, the dispute resolution process, similar to personal credit, is about 30 days, but it may take less. You want to monitor your business credit report for changes and speak to a representative if you contact Experian's Business Credit Help Desk at this number here if you want to make a dispute on your business credit report. Now, similarly to a personal credit report, there is a certain time frame dictated by law as to how long certain information must remain on your credit report. We use standard industry and government guidelines for keeping the data on this file, and expiration dates for data ensures that the information presented in the report is current enough so that that lender can get an accurate picture of your financial health. So trade data is going to remain on your credit report for 3 years. Now that's any accounts that you open up. Bankruptcies will remain on your credit report for 10 years. Judgments are going to remain for 7 years. Tax liens are going to remain for 7 years. UCC filings, that's going to remain for 5 years. Collections will remain for 7 years. And bank government and leasing is going to remain on your credit report for 3 years. It's really important to grow your business with good credit practices. So you want to maintain a distinctly separate business credit profile. You want to stay current on your payments to all of your creditors. Ensure that your good payment history is reported to the credit bureaus also. So make sure that you're working with those lenders that report to the credit bureaus. And if you don't see them reporting, contact them and say, hey, I'm working with you because you said you reported to the credit bureaus. I'm really trying to build my business credit profile. Please ensure that you're reporting my positive payments. You also want to monitor your business credit profile to detect any issues or fraud, and you want to use the business credit reports to limit the risk, your risk of doing business with others. And we have a whole bunch of resources here that we can share with you after the presentation as well.
So yeah, so what I'm gonna do is I'm gonna end the presentation here. I'm gonna put these links in the, actually, I'm not gonna put them in the chat. What I'm gonna do is I'm gonna provide these links as well as a few other links to our to the team, and they're gonna send this to you all afterwards. I'm sure they have you all on the mailing list. That way you have them, because I know sometimes you get stuff in here and then you won't get that. Let's see. All right, cool. I want to go to some Q&A real quick, see if there's anything different. Okay, it looks like there's nothing new as far as business goes, but we do have 13 minutes left. And so here's the biggest thing that I really want to encourage everybody. And then if there's other questions, we'll continue to take those as they come in. Myself and Christina enjoy what we do. We love doing this. We're constantly out talking to people, trying to affect change, and inspire people around their credit journey. There is a mission as far as educating people, but I'll be very honest to say that as what I've learned in my year here at Experian is that there is more misinformation than good information that's out there in in the communities in which we serve. You know that there are certain individuals that carry gravity in these communities, or gravity within their families. We want you to be able to give them this information as well as too. So the stuff that we're sharing with you, the links that I just sent out, that promo code, the consumer education sites and different things, like encourage people to go and do that as well and look at that information as well. Experian has no skin in the game with people having low credit scores. It does not benefit us at all. It's not a goal what we're looking for. We're more than just one set of three numbers that are, either holding you back or making your dreams possible. And there's tons of individuals like myself and Christina that are staunchly passionate about consumers and want people to be successful. I'm a veteran. I spent 10 years in the Army. Is one of the reasons I took this position is because I think about how many of those soldiers were financing big trucks at 8% because they just didn't know any better, or they would get a bonus and go spending crazy and just all this other type of stuff. Or just with this last housing market, a VA loan qualifies you not to have to put any down payment, doesn't have to pay PMI, but you got to have at least a 620 to qualify. And there was a few soldiers that I mentor, and I felt bad as their mentor that I didn't have them prepared already because we weren't really having that conversation. The financial and credit conversation in a lot of different communities and a lot of different settings is, even peer-to-peer, is like taboo. If I can't talk to my friends about what they're doing with their cash, what I'm doing with my cash, what we're doing with credit, what we're doing with investments, like I had to reevaluate a lot of that. And I really approached people with this like a few years ago, like when COVID was happening, and frankly, when I was, starting my family as well too, because I wanted to be in a position where I was not only just, growing wealth for me, but for the generations that come after me. And so the credit journey is a journey. It does not matter where you're at. Christina, she'll say her piece to it, but she's had time where her credit wasn't there. I've had times where my credit wasn't there, but I took the steps and I built it back up, getting the information and the resources and the help of what I needed. And so again, these are just sprinkles on top of this cake. There's so many layers to this. There's much information and stuff that we can get into. We appreciate the opportunity to come and spend this time with you all today. We do not take it for granted, and we're looking forward to hopefully doing this again really soon. So again, if there's other questions, we'll definitely take those. Christina, I want to absolutely give you the floor for any closing, items or statements or anything as far as that goes. And then if our hosts, if they have anything that they want to come back on camera or anything to talk about next steps or to answer anything, we'll welcome that as well for these last 10 minutes.
Definitely, I want to echo TJ's statement that, I'm so proud of the work that we do at Experian, and this is a position that is very fulfilling for me to be the consumer education and advocacy manager, because I can tell you in my early 20s, I made every mistake that you could make with credit. I didn't realize that a 0% interest didn't mean that I didn't have to pay it for 12 months. It meant that I just had a 0% interest rate for 12 months. So I wasn't making payments, and I really significantly damaged my credit score. Now, I didn't know how that would impact my future. And I soon discovered when I went to get a car what effect that was going to have on my credit. So it's been an uphill battle in my early 20s navigating credit. But a lot of that also stemmed from the fact that I didn't have credit education growing up. Nobody told me how to properly manage my finances. It was kind of like trial by fire, you know? They tell you, go to school, get your degree, get a great job. Then what, right? You're left to try to figure it all out on your own after that. So that's why I really value the education that we do here and the resources that we have available for consumers. And it was mentioned earlier that I do manage an education ambassador program, which is an employee advocacy program here at Experian. And so what we do is we give Experian employees the credit fundamentals that they can then use to go out into their community and share credit information with their community. If you are part of a nonprofit, if you are part of an organization that you feel would benefit from a credit presentation, reach out to me. I would be happy to coordinate that with you, have one of our ambassadors come out, or if you're in the LA area, myself come out and give that presentation, because we really value this information. We want to get it to as many people as we possibly can.
Absolutely.
Thank you, TJ and Christina. That was amazing. And thank you, TJ, for offering to come back. We will definitely take you up on that. I can't tell you, this information is just vital for our communities, like you mentioned, and we really appreciate you being here today. Thank you, everybody who joined us today. Like it's been mentioned, you will be receiving an email with the presentation, as well as all the links from TJ in your inbox by tomorrow. And please, please, please don't forget to complete the survey that will pop up at the end of this presentation. Once again, thank you very much and enjoy the rest of your day.
Thanks, everyone.
Thank you.